Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
We are back with two interesting webinars this weekend. The first is for NRIs looking to take advantage of the strong growth and opportunity that India offers to the world. Usually, NRIs have really complicated portfolios and investment strategies. But do you even need such complicated portfolios to build wealth? The answer is no. You only need a one-stop solution called NEO to help you build your wealth in India. NEO is a simple and effective multi-asset investment strategy that can take advantage of various opportunities in India. The second is exploring aggressive investment ideas. So, what is a high risk and a high growth investment strategy? Do you even need a high risk approach to build wealth? What is the difference between an aggressive investment strategy and a conservative one? The most important of all, when should an investor be aggressive and conservative? To know more and register for these webinars, click on the description below.
Deploying diligently. In a market like this, everybody is anxious to deploy money. In fact, if you are a mutual fund or a product manufacturer like a PMS or an AIF, your performance is bound to be very good because the market is favoring. When the market is favoring and your performance is very good, you tend to collect more money. And you start thinking that you can deploy that money fast and still make money. You also worry that what will I do if I get more money? Then I'll have even more to deploy. So let me deploy this money right away. In the case of mutual funds, there is a tendency to take a view that their job is to deploy and not to hold cash. But these aren't ordinary times. These are extraordinary times when liquidity is chasing value. What we experience most of the time is difficulty in spotting value. If you spot value with great difficulty, you also discover that the value opportunity doesn't last for too long, maybe a few days. Very often, bad news is your window to buying a value opportunity. If there is bad news either at the market level like you saw on the election result day, or there is bad news at the company level that you see often in many companies, that bad news opens a window where you get the stock 10 to 20% cheaper or maybe even 20 to 30% cheaper. Just a few days. Now in that window, you must be fully prepared with a decision to deploy and you must execute that decision to deploy. Then if you have taken the right safeguards and done your deployment sensibly, you would have deployed diligently. My sense is in this market, you need to keep on repeating this process which I just described again and again and again. And that's the only way you can deploy money sensibly and diligently for investors. So I don't subscribe to the mutual fund philosophy that if money comes today, I'll deploy it in the portfolio and forget about it. That is not a good strategy in many parts of the market. As an advisor, I have a lot of reservations recommending companies at high valuation. I have a lot of hesitation recommending mutual fund schemes who deploy money as soon as they receive it, especially in very expensive parts of the market. So I would be very cautious in recommending a PSU or a defense today. Deployment is very critical in determining the returns. You cannot dump money into stocks at high valuations and still hope to have a good performance. I would definitely want to deploy money in a way which gives the investor a better opportunity to decent returns. And if the deployment is done with great care and lot of forethought, chances are that the returns will be exceptional. Many people look at our PMS products and ask how some of these products are doing better than their expectations, better than benchmark, better than what peers are doing. And the answer is very simple. It is only because of diligent deployment. The same stocks, the same portfolio will give lower returns if we just dump the money into the portfolio as soon as I receive it. Suppose I receive the money today and dump all the money the next morning into the same portfolio, we would not be able to deliver the same performance. The performance is largely attributable to diligent deployment. So, I know the value of diligent deployment. I will swear by the value of diligent deployment. And it is important to deploy money sensibly into stocks, wait for opportunities to come before us, and be prepared to participate in those opportunities, and to ensure that when the opportunity is before us, we participate and deploy money adequately. So, the alternative is an easy one which a lot of mutual funds take, but the difficult path is what is going to generate better returns in the long run. The difficult part also ensures that in the short run, if the market falls, your drawdown in your portfolio is somewhat contained. We have at least done something to contain it. And by doing so, we are also giving us more confidence to invest when there is a drawdown in the portfolio. And the investor or the client also feels that yes, this deployment was done correctly. Now I should give them more money so that more deployment can be done at more favorable valuations in my portfolio. That feeling will happen only if you deploy the investor's money diligently. This is a time to be diligent in your deployment. Thank you for watching this video.